Good morning. Thank you for being here. This class is called Strong Business Credit, and this is going to talk about. Good morning. Sorry about the delay. It was my computer had a mind all its own at the moment. Thank you for being here. This class is called Strong Business Credit, and this is going to talk about what lenders are looking for from small business owners when small business owners are looking for money. So let's get started. Oh, make sure that you have your participant guide. It's going to help you a lot as you go through the process. The agenda is going to be quite comprehensive. There's a lot of information to go over. So we're going to look at credit reporting. We're going to look at the impact of your personal credit when it comes to your business. That's probably looked at a little bit more closely these days after what happened with COVID. We're going to look at what business credit reporting actually is, and there is a difference between business credit reporting and personal credit reporting. How lenders evaluate your credit worthiness. They're always looking to see if you are what they call a good risk. That means, will you pay them back what you owe them plus the fee that they charge you, which is called interest. And then we're going to look at credit reporting and business operations. So there's a lot of stuff that we're going to be digging into. Some of this will be familiar to you, but some of it will not because you probably haven't or do not have a business credit rating or reporting system set up yet. So welcome. We want to understand how personal and business credit reporting landscape relates to your business. How important is this to you and what impact does this have on your business, the personal as well as the business credit? Identify what goes into each one of those and what the reports look like and what the scores mean. The numbers are not the same, and they emphasize different things. Learn how to establish and build strong personal and business credit histories. That's definitely something that is important both for your personal credit as well as for your business credit. And then understand how lenders and others may use your personal and business credit information. You're going to give them a lot of stuff because they're going to ask for a lot of stuff. And if you don't want to give it to them, just please understand that you will not get their money. Okay, so it's very one-sided. Learn how credit reporting services may benefit your business. Leverage strong personal and business credit histories for better financing terms. One of the things that credit bureaus look at and lenders look at is what have you done in the past so they can assess what they think you will be doing in the future. And then recognize when business credit history may become a bigger factor in assessing finances. As a small business owner, you're probably not at that point yet, but it does not hurt to know what they're looking for so that you can then decide how you want to manage how your credit reporting, and how that fits into the whole financial strategy of your business. So let's get started. So we're going to talk about what you want to know and what you want to learn about business credit. And one of the things that we're looking at is your big picture. So what is this thing called business credit reporting, and how does it impact my business? So why are credit reporting agencies important? Well, for the same reason that if I came to you and asked you for some money, and you and I don't know each other very well, your response would probably be, I don't think so. So, what is it that you need to have that makes you feel more comfortable in dealing with someone like me who's asking for your money? Well, one of the things that you want to look at is, how have I done this before? Have I done this before? If I've done this before, did I live up to what I said I was going to do? If I borrowed money from someone else, did I pay them back according to the agreement? Did I pay them back before the agreement? Did I get the money back to them before I said I would? Did I have late payments? Did they have to call me to say you owe me money and you have not paid me back? So all these things that you're thinking about as a lender to share your money with me, you need to have something more than just me walking in with a smile on my face to say, "Hi, I would like to have your money." That's not enough. Okay? So, what are we talking about when we talk about credit? Credit means that I am asking you, the lender, to allow me to rent your money. Okay, so I'm going to come and I'm going to borrow money from you, and because I have needs, and you agree that you will share your money with me so that I can take care of those needs, whether it's buying new equipment, whether it's expanding my business, whether it's bringing on new employees, whatever it is, you're feeling comfortable enough with me that you will let me to have that money, and that you have looked at my background. That's what those reports are that we were talking about. You've looked at my background, and my background says, here's a person who pays her bills on time and pays them in full, doesn't have any kind of a negative report in the scores and in the reports that come from the credit bureaus. Or it says, here's someone who seems to run into problems and doesn't pay bills on time, and has issues with getting the money back to the lender. So you, as the lender, are taking all this information in, and you're assessing whether you actually want to offer me credit, let me borrow your money, share what you have with me. You're thinking that, am I a good risk? Meaning the answer is yes, this is somebody that I feel comfortable in sharing my money with. Or am I a not so good risk? I don't like the fact that this person doesn't pay bills on time. Maybe as a lender, you're going to look at this and say, let me look further into this to why this person did not pay bills. We're in the middle of COVID. Did the person lose a job? Was there something that happened in the family? Um, so what is going on here that made me, the person who's asking for money, not look as good to you as you would like? So when you're looking at personal credit, the history is a record of the use of your credit that goes to a consumer credit reporting agency. Now, all this information is in your participant manual. And I want you to be serious about looking at this and deciding for yourself how this impacts you personally and how it impacts your business. So, from a business credit history standpoint, and I'm not sure that you have this yet, your business's record of handling debts and financial obligations reported to business credit reporting agencies. Okay, that's a bunch of gobbledygook. All it means is, did you do what you said you were going to do? Did you borrow money? Did you pay it back in time? And what happens is that, and it's not just from a lending institution, but it's also, how do you pay your vendors? Are you paying your vendors on time when you buy supplies, when you buy equipment, etc.? Are you paying that on time so that the the vendors who are reporting this stuff back to the credit bureaus are saying, absolutely, this person pays their bills on time, or no, we've had some issues about this because they run into some tight things and they don't pay us when they should pay us, etc. So that's a conversation, that's a constant conversation about you and how you manage your money. That's what all of this is about. How you manage your money when it comes to you have borrowed somebody else's. Okay? So when we're looking at this, we're looking at what is it that these lenders want to know about us, and what is it that we should be able to have that conversation with the lender about. So I want money. Well, what's a lender gonna, you're the lender, what's the first thing you're gonna ask me? Why? Why do you want money? Just wanting money is not enough. Don't we all want money? But what we're looking at is, what is the reason that you want money? So, am I expanding my business? Am I buying new equipment? Am I bringing new people on, etc.? Okay. So, am I getting inventory? Am I bringing stuff in that I can make stuff with so that I can sell it? Am I purchasing equipment? Am I managing working capital? What is working capital? Okay, so it may be that this is the money that I kind of keep on the side so that if something pops up, I already have it. It could be a line of credit that I have that I'm asking for from the lender that says, if I see a piece of equipment that I need to buy, it's a great price, but I don't have all the money, I can use this line of credit. I will buy the equipment and then I will pay the line of credit back. It works like a credit card. So when you're looking at your personal credit and you're looking at your business credit, what you as a lender are looking for from the small business is, how does this all fit together? Now, before there was COVID, a lot of emphasis for business owners was placed on their business credit. How do they work with their current lenders if they have any? How do they work with their vendors, with their suppliers? Okay, so do they pay their rent on time? Do they take care of what's in front of them right now? And so when they're asking for more money, it's to make some expansion in their business of some kind, maybe inventory, maybe equipment, maybe to hire someone, etc. From a personal standpoint, personal credit is looked for in terms of every time you borrow from someone. For instance, when you use a credit card, you have just borrowed from the bank. How do you pay your credit card off? Do you pay it when it is due? Do you pay the minimum? Do you pay the maximum balance? How do you handle that? So those are things that you as a lender looking at me as someone who wants your money and who needs your money in order to expand my business. I'm coming to you and asking you for money, but you're looking at me and saying, I need to know more than just you and a smile. I need to know how you think about your business. I need to know what you've done in your personal life before you came here asking for money for your business. So there's a lot of things that lender is looking for that I, as the person asking the lender for money, need to be prepared to have that conversation. So we're going to look at a case study. You guys are used to case studies by now. And so this is a case study about EcoGrow Solutions. And so EcoGrow is a business that that a father and daughter are working on. This is in your manual. It is on page 11 in your manual. And let me just read it really quickly for you. Rosa is 21 years old and wishes to patent and sell a plant nursery irrigation system. She is partnering with her father, Albert, an avid gardener and retired veteran with a disability who opened his own commercial nursery business 2 years ago. Rosa grew up gardening with her father, and while in high school, she developed an innovative water-efficient irrigation system for their home flower and plant nursery. This experience increased her interest in science and technology and led her to pursue a biochemistry and agribusiness degree. She is in her second year of college and has developed an eco-friendly plant nursery technology as part of her studies. Her father has incorporated this system into his nursery business. And Rosa and Albert believe that there is a market to sell this technology to commercial nurseries and farmers. Therefore, they need financing to develop this line of business. EcoGrow's revenue is under $80,000 a year, about $60,000 from 3 contracts for providing gardening services to government buildings, and about $20,000 from sales to retailers. Albert already has a business bank account because it is a requirement to do business with government agencies. So there is a business that already exists. There is something that is being built that the business would like to offer others. In order to offer others, in order to sell that to the community that they want to sell this to, they need some more money. So think in terms of Albert and Rosa. Have they ever applied for business loans or lines of credit in the past? That's one of the things that you as a lender want to know. What information or documentation did the lender obtain and request during that loan application process? We always, whenever we go ask somebody for money, first of all, we ask them for what do they need us to bring to them because we want to be in the best light possible. We want to be in the position where this person says, absolutely, this is a great person to do business with. I'll gladly loan my money to this company because I feel comfortable that the risk is low and that they will pay me back. And so, do you as a lender need to check my credit history? So think about those things when you are deciding what are you going to do when you go ask somebody for money, and how is that going to impact how you and the lender actually work together. So we look at what impact does personal credit. Now, this is for my business. So, but everybody's looking at my personal credit. Why are they doing that? It tells the lender who you are, how much debt you already have, and how long have you had it. Do you have a car loan? Do you have a mortgage? Do you have a student loan, etc.? Okay. How frequently have you applied for credit? Am I the 16th lender that you've been to, or am I the first lender that you've been to? How much credit are you looking for? Now, this is extremely important because this says to the lender, I've thought this through. I have a financial strategy. I know how much I'm going to need, and I can show you how I'm going to use that. That makes the lender feel much more comfortable in that you have thought this out. You can ask whatever questions you need to ask of the lender to make sure that that strategy is workable, but the lender knows that you're taking this very seriously. You're not just popping up and saying, hey, I need $100,000 to help my business. Help your business do what? And if that can't be answered in a way that the lender feels comfortable, you don't have to worry about getting money from that lender because you won't. Okay? So, do you make on-time payments? Do you have late payments? These are all things that we've already talked about. Is there any negative information in public records? Like, has somebody sued you? Have you filed for a bankruptcy? Has there been a foreclosure? These are financial things that happen in your personal life that will have an effect on how a potential lender looks at you and your business. So major consumer credit reporting agencies for personal are Equifax, TransUnion, and Experian. So you've probably, if you haven't heard of these, you will, because they're out there and they are the ones that if you go to buy a car, the car dealership is going to do some of the same things that a lender would do if you were doing something within your business. They're going to go to the reports. They're going to ask for a credit score, and we'll talk a little bit about that later. And then they're going to ask for the report to back up the score. So when it comes to personal credit, you definitely want to make sure that before you go to a lender to talk about your business, make sure that you've checked on your credit personally, because you don't want the lender to find out something about you that you didn't know. So you have personal identifying information. What's your name? What's your social security number? What's your address? What are your previous addresses? What's your date of birth? Boy, that didn't come out right. What's your date of birth? What's your phone number? Who have you worked for? When you're looking at your credit history, they're looking at how many accounts do you have? What kinds of accounts do you have? Have you had any problems in taking care of those accounts? What's a charged off account? A charged off account is one where you could not pay it in full, and so the lender reduced the amount for you to pay or just wrote it off completely. So though, and yes, those do end up on your credit history. And that's one of the things that you don't want the lender to find out about this before you do. You need to know what's on your credit history. And so what kind of inquiries are being made? If you have ever purchased a home, your realtor will tell you once you start to put in the paperwork, do not go looking for any other money. Don't go buy a car while you're trying to buy a house. Don't apply for a new credit card while you're trying to buy a house, because they want to keep that information very clean and don't want it to look like you have too much debt and your income will not be able to take care of the debt that you have, and you're asking for more debt. So those are things that you need to be very aware of. And then, of course, public records. Public records can go to the courts. Okay, so bankruptcies, foreclosures, sometimes they may have information in there about write-offs, but usually the write-offs come directly from the bank itself and they don't get as far as the courts. So, but what don't they care about? Okay, so remember that this is about credit. You need to have a good handle on managing your money, whether it is credit or cash. But what this is about is your credit report. So they don't care about your cash. They only care about, are you paying off that credit correctly? So if they're looking at your banking and your savings balances, that's cash. We don't care about the cash. Don't care about how much money you make. Don't care about your medical history. Don't care about things that you buy with cash, check, or debit card. Now, why debit card? Debit card is like cash. It comes directly out of your account. You don't ask somebody else for permission to use that. You're not going to a lender and saying, may I borrow some money and so that I can use my debit card. You're saying that anything that you purchase with your debit card immediately comes out of your checking account. So there is no credit that is allowed. That's like a cash payment, just like a check is like a cash payment. So looking at business account information, all they really want to know about your business is it a viable business? And is it a business that makes sense for us to actually invest in? Race, gender, religion, national origin should have nothing to do with your credit. I don't care what race you are. I care that you pay your bills on time. Your driving record and your marital status should not have anything to do with your personal credit report. Personal credit report is simply you borrowed money from so-and-so and you're paying that money back. That's what I want to see. I want to see what kinds of payments that you're making. I want to see that the payments are on time. I want to see that there is a mixture of the kinds of credit that you have. You do have a mortgage. You do have a car payment. You do have a student loan. You do have a credit card. I want to see that you can balance all of that and you can take care of your obligations. So that's what the lender is looking at when the lender is deciding whether you are credit worthy or not. So what is a personal credit score? The credit score and the credit report are not the same, by the way. So based on the things that you do, how you pay off your bills, there is a scoring method that runs between 350, I think, to 850. I think that's the span. So if you're on the lower end of that, it doesn't necessarily mean that you have not paid off your bills well. It may mean that you're new at this. You've never had credit before. It may mean that you're like a friend of mine who decided he was not going to use a credit card or ask for anybody's credit ever again because he got himself in a lot of trouble and it took a lot of time to pay off those bills. So he went to what he called his cash diet. So he uses only cash and he uses only his debit card. Now, what does that do for his credit score? It does absolutely nothing for his credit score because it's not credit. So his credit score is very low because the credit score matches what you're doing with somebody else's money, not what you're doing with your own. So you can see your score, and there are a lot of different ways that it's used. If you're buying a house, lenders have a special place where they go to get information that has your credit score and your credit report. When you go to buy a car, they may go to a different place that has it. But in general, you're looking at your FICO score or your Vantage score. And we'll talk a little bit about that later. So when you look at your FICO score and your Vantage score, I said 350, it says here 300. So I'll take what they say, 300 to 850. So if you're on the lower side, people want to know why. And if you're on the higher side, they definitely want to know, can you continue to stay in that higher area? So my friend who decided that didn't want to do credit anymore. And so his credit was low because he had more bills going out than money coming in. So he had literally had to talk with different like credit card companies, because that's usually the biggest thing, and figure out, negotiate how those bills are going to be paid. Now, once those bills were paid, then he said, I don't want those credit cards anymore. I don't want to deal with credit. I don't want to go through this anymore. And there are people who feel that way. There are other people who feel that I've run into a problem. I didn't have a job during COVID. I got behind in my bills because it's hard to pay bills with money you don't have. So my credit score, which was in the 700s, is now in the 400s. 700s looks good, 400s does not. What do I need to do to build that score up? Okay, so you should know what your credit score is. You should know what your credit report says. And you should know when you get your credit score, it will tell you, is it a Vantage score or is it a FICO score? There are two different ways of looking at how this is done. FICO gives you the percentages of where they put the emphasis on your credit. They look at your history. Have you had this credit? Let's just talk about credit cards because they're pretty easy. Have you had this credit card for a year or have you had it for 10 years? How much debt do you have outstanding? Now, they're not only looking at credit cards, they're also looking at, wait a minute, you have a car payment. Um, you also have a mortgage and you have another kind of loan. So when they're looking at this outstanding debt, they're looking at the totality of your debt, not just the credit card. Okay. And so, how long have you had credit? Did you get credit when you immediately got out of college? Did you get credit after you had been working for a few years? Did you just get credit? Have you had credit for many years? So, but I want you to take a look at this really carefully. You'll notice that your past payment history and your outstanding debt are 65% of your credit score. That means that you need to watch very, very carefully, especially the outstanding debt and the payment history. Am I paying my bills on time? Am I making sure that everything is taken care of? Do I have too much debt? Do I need to start getting rid of some of this debt? What's my debt strategy? Okay. So how long have you had credit? What new applications have you had for credit? And then the types of credit that you have, like we are talking about, whether it's mortgage or car payment or car loan or credit union or whatever. Okay. From a Vantage score, they look at things as how are they putting emphasis on your credit amount. So they look at past history as that's a big deal for them. They look at the age and type of your credit. That's also a big deal for them. And they look at the amount of credit you use in terms of all the credit that's out there. That those three things are a big deal for them. Okay. So they don't give you percentages, but they're telling you these are things that we monitor. Looking at your balances. How much debt do you have? Yes, that's important, but don't put a lot of emphasis on recent credit, any kind of inquiries that have been made, and that credit that is available. So take this seriously. Look at your own information and make sure that you don't get any surprises when you go talk to a lender. So, what is a good personal credit score? Okay, from 300 to 850, just what we talked about. Okay, so the space in the middle, that fair credit area, just means that you need to work harder to move it as high as possible. Make sure your bills are paid on time. Make sure you're not spending more than the credit bureaus think is necessary. And that's about 30%. So let's just say I have a credit card of $1,000 and I spent $300 on that credit card. When that gets reported to the credit bureau, it says that I've got a 30% usage. If I spent $500 against that $1,000 on my credit card, it now says I have a 50% usage. Be aware, it does not matter whether you're going to pay that off when the bill comes. So if the bill comes on the 25th and you pay it off on the 25th, it has already been reported to the credit bureau a few days before that. And the credit bureau looks at this as a 50% usage versus a 0% usage because you've already paid it off. So that's a kind of sneaky little thing that you need to be aware of. And you need to be aware of that for your personal as well as for your business. So keeping up with your personal credit report, this This is so helpful. Now, this is free. Your annual credit report is free. There are also Intuit works with Experian, I think is the one. And you can go into Experian through Intuit, and that's at no cost. And you can look at your credit score. You can look at your credit report. You can look at why your score is what it is. That's something that is necessary to do for you, and make sure you do some research to find out. This annual credit report is free, and you can get it once a year. The common thinking is that what you do is you get one from each credit bureau once a year, but you get a report every 4 months. So you may get Equifax in January, you get TransUnion in May, and you get Experian in September, because you want to see the fluctuation of how your information is being shared with the credit bureaus all during the year, not just once a year. You also want to check to make sure that you're looking at your report in detail. Again, you don't want somebody to tell you about something on your report that you didn't already know about. Provide copies, never originals. I had to find this out the hard way. I actually sent somebody my originals, and that was not a good idea. It took a long time to try to recreate all that stuff. So always provide copies anytime that you're looking at your credit report. And let's say you see something that isn't correct on it and you want to correct it, provide copies so that the credit bureau has the information to make the corrections. Send disputes to credit reporting agencies and to creditors. You always want to make sure that your credit report is accurate, because people are looking at it when you say you want their money. And request a new credit report. You want to make sure that, you know what, not only did I send this to you, but I want to make sure that you corrected what I said. That's important to me. I want to make sure that this is corrected and that we don't have to have this conversation again. So the impact of your personal credit on your business, there is something called the Fair Credit Reporting Act and the Fair and Accurate Credit Transaction Act. Welcome to the government and acronyms. Okay, so the purpose is for lenders and businesses to get their own credit reports, which is why you now have the free credit report that you can get. Okay. When you need to give permission to others to see your personal report, okay, so you have to say that they can do it. That's why when you, let's just say you want to buy a car, when you are financing that car through the car dealership, they have you sign papers that say they can go and look at your credit report. Okay. You need to see your credit report also. You need to know what your rights are. You need to know what's on the credit report. You need to know all of that before you go to a lender. And if there's any problems, you need to let the credit bureau know that these things are incorrect. So this is just a quick example of a sample personal credit report. And it's going to have basic information in it. It's going to have your name, your address, your phone number. It's going to have who you work for. It's going to tell you about good stuff that's happening, and it's going to tell you about stuff that is happening that is not so good. So it's going to give you all of that information. Okay. And while it gives you that information, what you want to know is How do I keep this as clean and clear as possible? So best practices for building a strong personal credit history is pay your bills on time. That's a given. Now, that's easier said than done for many of us because we may not have enough income coming in. If that's the case, then we need to start negotiating with those people to whom we owe money. People don't want you to walk away from what you owe them. They want you to pay them. They will negotiate with you for the payments. And sometimes they will tell you, no, I will not negotiate. Honestly, I've had this happen. I've had it happen to some clients of mine, and I've had it happen to me. That I will tell you my personal story is I had someone tell me, no, that is not what I will take. You will pay me X amount of dollars. Well, I didn't have X amount of dollars. And I said, no, I will pay you this lower amount because I can afford to. No, I will not take your lower amount. So I paid the lower amount. I paid the lower amount on the date that I said I was going to pay it, and I paid it consistently until the bill was paid off. I never heard another word from that particular lender because I did what I said. They're going to try to get as much out of you as possible. What you want to be is consistent. You want to make sure that your bills get paid and that you are doing this in such a way that they see your character as a person who lives up to what your obligations are. You want to keep outstanding revolving debt low. That means that if you have a credit card that has $1,000 worth of money that you can use on it, don't use $1,000. Don't use anything if you can get away with it. If you may want to buy, well, I almost said buy gas, but gas prices are so high right now. But you may want to buy gas on your card maybe once a month, once every 2 months, just to show that you are doing something with the card and that then once you buy that, you pay it off completely. You want to pay off any kind of outstanding bills that you have, whether they are credit cards, whether they're to vendors, whatever it is. You don't want to have anything negative coming toward you, like filing for bankruptcy or having your home go into foreclosure. That's why the negotiation piece is so important. And you want to, most importantly, when you're looking to borrow money, do your homework, comparison shop, look at what's out there, look at who's offering what to whom, and does that fit into what you're looking for? Maintaining a mix of credits, that's always good, and avoiding closing older accounts. Why do you want to not close older accounts? Well, when we looked at what FICO looks for and what Vantage looks for, one of the things that's big for them is how long do you keep your credit? And so if you're closing older accounts and you're only showing newer accounts, that's not having a positive impact on you. That's having more of a negative impact on you. So look at things very carefully. If you have questions about this, if you have questions about what accounts to close, what accounts to leave open, you can talk to your bookkeeper. You can talk to your trusted advisor. Okay, whether you're talking to SBDC or SCORE, or even you can talk to us. You can also talk to your banker, whom I hope you have built a relationship with before you want the money. So when you're looking at this impact of what happens in your personal world, that is going to give your lender, your potential lender, the information that allows him or her to decide whether you can do this from a business standpoint. If your personal credit is, you're managing that well, that your lenders are happy with you, you're happy with how you're paying for things and what you're paying for, then when you go look for business credit, your lender, your potential lender there is going to be much more comfortable in saying this makes sense because I see from the personal history that this is someone who takes seriously the fact that they're using someone else's money. You know, good old OPM, other people's money. We always want to make sure that they're comfortable with us and that we're comfortable with them. So when we look at what's happening with Rosa and Albert, we're looking at how their business credit is going, what's being looked at from their standpoint. So that in your manual, that's on page 22. And let me read that to you really quickly. Albert mostly leveraged his personal savings to launch his nursery, but he has also had some personal loans from a bank and a personal credit card that he's been using for his business. He is not familiar with non-traditional or non-bank financing services, and last year the nursery had a few slow months, and as a result, he took a pay cut. This caused him to fall behind on some of his personal credit card bills and to miss a mortgage payment on his home. At the same time, Albert brought in new inventory and purchased advertisement in local media outlets. This has helped his sales recover and his customer base is now growing. So Albert is still getting caught up on his personal debt, and his personal credit score took a hit because of last year's financial troubles. Rosa has never used credit. Therefore, she does not know much about financing options, and she has no personal or business credit score. So, when you look at this, and we talked about, sometimes people have a low score or no score because they've not done this before. Sometimes people's scores fall because of circumstances in their lives. This happens to all of us. So what are business credit reports? If I am a lender and I am looking to decide whether I want to lend my money to someone, I am always looking for as much information as I can find that helps me to make a solid decision. So risk assessment tools used to evaluate the risk of lending, extending trade credit, contracting with the business, all of that stuff is included in your business credit report because that says, oh, this person is a good risk. I have no problem doing business with this person. They've got contracts to back this up. They've got a customer base to back up the income that they're making, which will allow them to pay their debts off in the manner that we have negotiated. So your personal credit report and your business credit report can be a little different. With your personal, we talked all about that, about who you are, your credit history, who's been looking at your background and anything in your public record. From your business standpoint, they're looking at the business, not the personal necessarily. They're looking at the business information. They're looking, do you have your business license? What's your EIN number? Where's your location, etc. They're looking at your business credit history. It may not be a loan. It could be your business credit history is coming from how you interact with your suppliers and vendors. And then it's also looking at your business background, your registration, your financial information. So all of that stuff that keeps you legal within all the government agencies, as well as keeps you in good standing with people with whom you're doing business. And it also looks at your public record. Are there any things that have been said in a negative manner against your business? So we had three business agencies that handled personal. Now we're going to look at the three business industries, and there are more. There are more, but these are kind of like the big ones. Dun & Bradstreet, Equifax, and Experian Business. There is an Experian Personal and there is an Experian Business. Equifax, there is a business portion and there is a personal portion. Okay. You notice TransUnion is not here. This is Dun & Bradstreet. Dun & Bradstreet does not do personal. And so they focus on your business. They're looking at you, your vendors, and your suppliers. That's basically how they're getting their information. Equifax is looking at kind of the same kinds of things that you do from a personal standpoint. How do you manage your loans? How do you manage your lines of credit? How are you paying your bills, etc.? And Equifax is pretty much the same way as Experian. Okay. So when they're looking at this information, and these are things that you need to be aware of, because again, you don't want to walk into a lender and have the lender surprise you with something that is on your report. So you want to look at all of this stuff from the background area, looking at what's happening in your business. Many of you are not looking at this because you don't even have a business, you don't have any business credit yet. So look at this from the standpoint of what will it look like when I actually do have business credit? And what will the lenders be looking at from that standpoint? So consumer lending regulations are still managed by the government with those acronyms that we came across. And we also want to look at who's providing the reports, what's on the reports, making sure that if there's anything in the report that is incorrect, that it gets corrected, just like what you would do with your personal credit reporting. So when we look at scores, personal scores are created by the consumer reporting agencies, okay? So they're deciding that 300 to 850, they're deciding on that. From a business standpoint, it is created by the business credit reporting, and their scoring is not the same. Personal is from 300 to 850. In some cases for business, it's from 1 to 100. In other cases, it could be up to 1,600, depending on who is the agency and how they actually look at your scoring. So check with your credit report to make sure that the information is accurate. This sounds redundant, but it is so important. You can create a Dun & Bradstreet account. Don't let them sell you anything. They have a free account. You don't need anything that they are buying right now. You may at some time decide that you would like to buy their services, but now is not that time. And some businesses use credit monitoring services to receive any kind of alerts about you and your credit. So look for stuff that's free, look for stuff that's appropriate for you in your business at this point in time. Stay aware of what the bureaus do so that when you're ready to make that move, it's not a new idea to you. You've already done your research. So when you look at this and in your book, your exercise on your credit reports is on page, let me see what is page 28, your credit report checklist. And do this for yourself. Before you go talk to a lender, do this for yourself. Check with your credit reports to find, and now in your case, you're going to be looking at personal. So look at your credit reports, make sure your credit reports are up to date, that there is nothing in your credit report that is incorrect. When you get to the point where you want to have business credit, you want to do exactly the same thing. You want to take a look at what your business report looks like. Is everything that's on it correct? And anything that is not correct, then what do you need to do in order to make it correct? So, how do you establish business credit? Well, you can do it through lenders, you can do it through suppliers. Sometimes even your customers will have a say. And some credit bureaus will ask your customers about how you interact with them. Insurance companies will do that because one of the things they're looking at is how much are they going to charge you for insurance for your business, okay? And then procurement are the purchasing officers in government agencies. They're always looking at this also because, again, they're looking for that big word we talked about at the very beginning, credit worthiness. So they're always looking to see that they're making a good decision because they're choosing a company that is credit worthy. So what do you need to have when you get ready to step into that area and say you want your business credit done? Okay. So you want to look at making sure that you have your EIN. You want to make sure that you have, if you already have a business credit report, that you want to get that. If you don't have a business credit report, make sure you have your personal one because it is so necessary for you to have information that you know about and that the lender doesn't surprise you with. And then know who's sending information to these bureaus on your behalf. Who are the people who are saying, yes, this is a good risk, or no, this is not a good risk? So what you want to do to maintain your strong business credit is very similar to what you want to do to maintain your strong personal credit. Pay your bills on time. Pay your taxes on time. Make sure that your business is visible. It is extremely hard to have an excellent business that nobody knows about. So you don't want to be an anonymous business owner. You want to be out in front. You want people to know who you are, what you do, and why they should come to you. The more people who know that should mean the more income that you have, which should mean that you have more money that is flowing through your business. We did cash flow management last week, talking about what comes in and what goes out. And we're always managing that, what's coming in and what's going out. We want to most definitely separate personal and business finances. That is something that the government calls commingling. And the minute that you commingle your business finances with your personal finances, your tax structure changes and not to your advantage. And you always want to monitor any kind of credit that you have, whether it is personal or whether it is business. So, back to our case study, and I'll read that to you really fast. That is on page 32. Albert has heard of business credit, but does he really understand how business credit reporting works? And he has not tried to establish a business credit history. So Rosa knows very little about all of this, okay? And the credit history and the opportunities that it may offer. So how might Albert establish and improve his existing business credit history? How should Albert and Rosa consider working on a business credit for their new venture for EcoGrow? And what steps should they take to build favorable business credit? So, and this is something that you have to think about. You have to look at, how am I going to be building a good, solid business credit history for my business? So what is my financial strategy? How am I using my money? When will I need someone else's money? Have I built that relationship with a lender so that when I walk in and say, I'm at that point in my business that I want to be getting money. I want to be adding money to what I already have so that I can grow my business, that it's not going to be a shock to the lender, because the lender and I have built that rapport. We've built that relationship. We're continuing to build that relationship. And in the next 5 years, how do you think a healthy business credit report could help you in your business? Well, we've already discussed some of that. Part of them being helpful to you is that you now have some history. You have kept an eye on your credit. You know what is on your credit report is correct because you have corrected anything that did not work. So all of those things, and please take seriously, these are the same kinds of things that you can do for your own personal credit. So when we look at credit worthiness, what are they looking at from a business standpoint? Well, lenders and businesses use the credit reports like we talked about. Consumer and business credit reports, they're also looking at, okay? So not just the business stuff, but also the consumer stuff. Businesses provide credit reporting, analytics, and scores. So they may go to your vendors, your suppliers, and they're also looking at, what does the state say? Because all states have their own laws. And so what are the states saying about how your business credit is put together and how it can be used? So when we're looking at this, lenders look at what we call the 5 C's. Okay, they look at your capacity, your collateral, your credit history, your conditions, and your character. What does that mean? Your capacity is, can you afford this money? Do you have enough coming in that you've got enough to pay us on the money that you're asking? Collateral, do you have something that if you can't pay the loan, you've got this collateral that we can take that will help pay that loan off? What is your credit history? again, looking at personal and business, do you pay your bills? Are you looking at how things work in your world so that it's comfortable for you to say, yes, yes, I do pay my bills. I pay my bills on time. I pay my bills when they're due, etc. What are the conditions that you are doing this under? Are they favorable? Is this, and sometimes favorable means, is this a favorable time in your business history to go after money? We've all heard that lenders are very, very happy to give money to people who don't need it. Is this a time that you've got things set up in your business? You're not really ready for credit yet, but maybe you need to start looking at credit. Could it be a line of credit? A line of credit is I can get the money, I can sit it there and not touch it until I need it. And then character is, who are you? What kind of person are you? Do you take seriously what you're doing? Are you looking at your business from a very strong business standpoint? Are you handling what happens in your business from the standpoint of a person who cares about the business, but also cares about the personal piece of it too? Does your personal history say that you are a strong character, that you do things the way that they need to be done to get things completed? So there's a lot of things that are being looked at. Now, also, you also need to know that there are non-traditional areas out there that bankers and lenders look at. And so and what they're trying to do is get as much information as they can so that they feel they're making good business decisions. So we've heard that on your personal credit score, they're now looking at adding how you pay your utilities, how you pay your telephone, how you pay your rent, etc. Things that were never looked at before because they weren't considered credit. Well, if the lender is looking at your credit worthiness, they're looking at how you pay all of your bills. From a business standpoint, they're looking at who's talking about you and what are they saying about you? Are you managing, like that cash flow thing that we talked about before? Are you managing what's coming in against what's going out? So there's a lot of little pieces to this, but your job as a business owner is to be on top of this first and foremost before you talk to someone else. Because if you find something that's a little out of whack, get it straightened out. Get it cleaned up so that when you go to talk to a lender, you're talking to a lender from the standpoint that you've got this under control. So this is the same kind of thing that lenders are looking at from a business standpoint, because let's just say you go to a bank. Banks have underwriters, and underwriters are the ones who choose whether you get the loan or not. They're the ones who have to make that decision. The banker that you talk to is the person who's going to stand in your who's going to stand in your stead and who's going to be your champion at the bank. But it's going to go to the underwriter. And if the underwriter has an issue, it's going to go back to the banker. And the banker, because the banker knows you, can tell the underwriter the underlying story of why you're here and what you're doing to make this better. So all of this fits in such a way that you want to make sure that you and the banker are always on the same page and that you and the banker see this as a positive situation for you. So when and this just was just, and I want you to take a look at this in your manual too. It's looking at what things that a lenders look at. One was lender A, and this is lender B. But understand that they're looking at everything. They may not give the same weight to everything. So now when you look at, we go back to our case study, and we're looking at EcoGrow and what they're doing. They're trying to figure out, they're looking at two different lenders, and they're trying to figure out what's best for them. This is what you're going to do in your business. You're not just going to go to one place. Even if this is the place where you have spent most of your time, you've got most of your money there, look at other options. Go in with some knowledge that says, I have other options if you don't like the option that your current banker is offering you. So you need to know your credit, know your lender, and know your rights. That means that you've got some research to do before you even go to talk to a lender. And I would highly recommend you start doing that research now before you're even thinking about getting money from someone else. Get the feel for what this is, what this money situation is out here in the real world. Get an idea of who the lenders are. Know exactly what you can and cannot do. You can simply ask a lender, hey, if I wanted to borrow some money from your bank, what do you need from me? And they usually have an application that they can give you that you can use to practice to say, women, can I do this? Do I know these figures? Do I know where this information comes from, etc.? Make sure you're on top of your credit reports. Make sure that your credit score is a score that makes the lender feel comfortable in sharing his or her money with you. So there is a self-assessment that you can do, and I'd highly recommend that you do that. That's on page 39 in your manual. And we're back to asking those same questions and making sure that we're on top of what we need so that nobody's trying to surprise us. And they don't want to do that. Lenders are not out to get us. Lenders are out to get loans. They want to make loans. So it's not a got you situation, but we have to make sure that we are in the right place at the right time and asking the right questions. So when we're looking at credit reporting and business operations, what does your small assessing credit reports, your small business pays a fee to access the credit reports of consumers and other businesses? Do you need that? Or can you get that for free? And if you are looking for these reports, what is that helping you to do? Well, it's helping you to evaluate risk. You can do this yourself as you're looking to hire someone or work with a contractor. And you know that on your application, if you're hiring a person, on your application, it should always say that you may do a background check and you may do a credit check. Doesn't mean that you will, but it does mean person has to sign that to say, yes, I will allow you to do that. Some small business reports for consumers, looking at debts that are outstanding, looking at who the major credit bureaus are that are reporting this information. And why do you do that? because that report helps to support that feeling from the lender that I am making a good decision. If I say, yes, this is a good candidate, and I pass this to the underwriter, and if the underwriter finds something that makes the underwriter feel a little uncomfortable or need an answer, I feel comfortable enough, having worked with this small business, to say to the underwriter, this is what's happening, this is why, this is the way it is, this is still a good risk. So I want to, from my situation as a person who's asking for money, I want to make sure that my information is as accurate as possible and as strong as possible. From the lender's standpoint, the lender wants to make sure that that information is as accurate as possible and strong as possible, because that allows the lender then to feel more comfortable in saying, yes, I'm making a good decision by lending to this person. So let's look. I told you it was going to be a lot of stuff. Okay, and it was a lot of stuff, but let's look at some things that we need to really kind of think about. We need to think about our credit reports. Those are extremely important. And whether they are personal or business, they are very important to us. We want to make sure that they are very accurate, and we want to make sure that there is nothing in those reports that somebody else knows and we don't. So we are looking at if I have a strong personal credit report and I haven't started looking at business credit yet, I want to keep that personal piece very strong, so that when I decide to make that decision to move into business, I've got a good background. I've got the lender will feel comfortable with knowing that I do well. I pay my bills on time. I manage my credit. I don't overspend, etc. And lenders and others use credit information in many different ways about deciding about your business. And one of the things that I mentioned was that even as an employee, you as a business owner may ask on your application, and I highly recommend that you do, you may ask for permission to do a background check and to do a credit check. Why would you want to know that from an employee? Again, back to, are you making a good decision? What is the character of this person? Do they do what they say they're going to do, etc.? So all of this is about looking at credit, understanding what credit does, and how to use it effectively. There are some other classes that are in the virtual classroom that have to do with business credit and personal credit, also with loans and loan applications. So there's a lot of information that is available that you can take a look at. Also, have this conversation with your trusted advisor and have it with your banker. If you do not have a banker, I highly recommend that you start to build that banking relationship. It's extremely important to you and to the banker. So that's a mouthful and it's long. So what I would like for you to do, in your manual, there is an evaluation form, and that is on page 48. I would like for you to fill out that form and email it to me. My email address is here. What I'm looking for is what you thought about the class. Did I cover things that made sense to you when we're talking about business credit? And is there something that you would have liked to have seen that I didn't cover? So Give me as much information as you can. Let me make sure that I'm meeting your needs. Everything that's on these slides is in your manual, okay? So just remember that there's some resources out there. We know about the business roadmap, so that's a great resource. Our virtual classroom, that's what I'm telling you, that some of these classes are already in there. Some pieces of these classes are in there, different pieces. And we also, this is our small business education program. You can see our upcoming classes. You can see our virtual stuff. You can see our team, which needs to be updated. You can see different kinds of business resource partners that we have and a little bit about our podcast. So feel free to go there. Our podcast, as you know, is this is for small business owners. This is for resource people. And wait a minute, there's another question. What is a good bank that will allow a solopreneur to open a business bank account that does not require a minimum of $10,000 to open an account? Oh my goodness. I have one for you, and it just came through yesterday, day before, maybe it was last week. It is from Bank of Nevada, which I think they're calling themselves the Western Alliance now. Okay, so do me a favor, guys. Drop me an email. I will send you the documentation they sent me. It's just one page. Kind of talks about what they're doing, and this is for the small guy. This is not for somebody who's looking for, no, send me an email. Send me an email and I will send it back to you, okay? This is for the small guy, and this is for the person who, I'm just getting started. I just need enough money to get me moving in the right direction. So I will get that to you. The reason I'm asking you to send me an email is because I have to look it up and find the documentation they sent me, but I'll get it to you. This is the SBDC. This is the Small Business Development Center. If you are not a member of the Small Business Development Center, this is a free organization that has advisors. Just go to their website, click on Request Advising, and then go here to New Client Sign Up. If you are already a client of the Small Business Development Center, go here to Contact Us, and there will be on the right-hand side, there will be information about their general phone number and their general email address. Ask them who is the advisor that has been assigned to you. And spend some time getting to know that person, getting to know when you can get together. They are extremely busy. They are not going to get back to you in the time frame that you want. So make sure that you stay on their butts about that, because they need to know that you are serious about this, and they need to find that time to set up a schedule where you can talk. But that's a good place to actually have that conversation with someone. I used to work with the Small Business Development Center as an advisor, and it's a great way to have an ear that you can just ask any questions that you want to ask. There is no such thing as a bad question. Ask whatever you want to ask, have the conversation with them. If they ask you to do something, please do it, because they're asking you to do it as a way for you to grow in your business. There is also SCORE. Now you can go to score.org /Las Vegas. They're mostly virtual, but they have mentors there. Now their mentors are usually people who have been in business and may still be in business and want to share what they know, their expansive knowledge with you, the small business owner. So they want to make sure that you're okay. That was a lot. I know it was a lot. It is, I really did take up the whole hour and a half. I want to thank you for coming, and please make sure you fill out that evaluation and get it to me. and make sure that I have your email address. I will get you the information on the banking stuff that I got from Bank of Nevada. I'll look for it as soon as we get offline. Thank you guys. Appreciate you. Talk to you later. Bye now.